Hi, Steve here, and we're going to be doing another market update with the continuing fall in the cash S&P. The last update we did was about a week or so ago, and at that time we were making reference to these bearish engulfing patterns in blue, the evening star here in the red arrow, and talking about potential support right around the 1990 area. And if the market broke under that, our next support area would be towards the August, September lows. So that is what we're approaching now. And that's why I wanted to do the update. So this is the S&P through Wednesday after the close. And you can see we're approaching that potential support area. Here's a bullish morning star. And to refresh your memory, a morning star is a long red or black real body, depending on your charting service, a small real body, color doesn't matter, and then a tall green or white candle that gets deeply into the black candle, and that morning star confirmed the support area from the prior month. So the issue now, however, is there's nothing showing us the bears are losing momentum. Normally near a support area, I like to see something like a doji or a hammer, just something showing us the bears are losing steam. We don't have that yet, but nonetheless, the market is near support, so we'll be keeping an eye on what kind of candlestick signals we get if it gets closer to support. Now, what'll happen potentially now on any rallies is this prior support area here, here, and here near 1990 should become resistance. But let's look in case the market does break, especially on a weekly basis, under, let's say, the 1860 area, under the lows from August and September. And before I do that, one thing to keep an eye on is that if the market does break support, okay, this old support should become resistance. Okay, change of polarity. That's why I'm saying that now this prior support area here, here, and here, once broken, as it was here on the close, should become resistance. Same thing here. If the market closes under, let's say, 1860 or lower, this prior support around 1870 should become resistance. If, however, the market does break under the support and then gets back above the broken support, we have the famous crack and snap, where the market cracks under support and snaps back above the support area. And what's nice about that is it's potentially short-term bullish, and what we could do is use the lows of the move. Let's say it gets down to 1850, I'm just making up a number, and then closes, say, at 1880. If one does think about buying it, then you could use the low, say 1850, as your stop at level, because if the market is going to have a rally after the crack and snap, the low should be a support area, not be broken. So now let's move on to the next slide here. This is a weekly chart. And by the way, see it says weekly? I think they spelled weekly wrong. It should be this way. Anyway, so here's that support area we were talking about on the daily chart, and we just made this on a weekly chart. You can see a hammer over here, right around the 18. Let me see what was that level again? Right around the 1865, 1870 level. So if the market does close under that and holds that old support as new resistance, the next target is towards the 1820 area, the lows from early April and early October. So keep an eye on your emails. I'll be doing updates as necessary. This is actually something I used to do for my institutional clients. When I used to work for like Goldman Sachs and JP Morgan and hedge funds, is I'd send them updates as needed whenever their markets, and not following individual stocks then, whenever their markets made major moves. So something we really enjoy doing here, and hopefully it helps keep you abreast, and with what's going on here, especially with these big down moves. But, as tough as this seems, these big down moves, keep in mind since 2009, the market has rallied. I think the low was like 750 or 800, and we've gone all the way up to near 2150, 2140. So in the context of things, a 10% correction is really not that much. It seems damaging to a portfolio, but, actually deeper corrections are very normal with such a long bull market. So we'll be keeping an eye on this for you. And another thing we'll be looking at is Forex. I know many of you trade Forex, and not many of you look at monthly charts in Forex. But I wanted to show you this because it's interesting. In the pound, the dollar pound, We're near a major support area. You can see the lows back from 2010 near the looks like the 144 area, 143 area. And if it breaks under that, then we're looking at 135. And this is something interesting. I should have drawn a line here, but let's make an imaginary resistance line over here. Actually, let me draw one. Okay, so I just drew some resistance lines over here, bearish engulfing pattern over here, and notice how the market spiked above the resistance. And again, this is a monthly chart, so you have to wait for monthly closes. But this same concept is very true no matter what time frame you're looking at. Anything from intraday, which I know a lot of you Forex traders use, to daily, to weekly, to even monthly. So once the market breaks above resistance, it's very important for the bulls to keep the market above the resistance. If it fails to do that, it's actually called a falling off the roof. The Japanese will say, let him climb the roof, and then take away the ladder. So that's a false breakout, essentially. And here, the market got above the resistance and then got back under the resistance area, actually with the dark cloud cover. And when you have a falling off the roof, the target is the most recent low. So that was down here right around the 149 level. So one of the great things about Forex is it's very easy to short in the Forex market, and a lot of other advantages to trading Forex. So here you could have gone short or taken profits. Let's say you bought the hammer, have a protective stop under the low of the hammer. You would have exited here or shorted here, and your target would have been down here. So you're looking at quite a few hundred pips potential profit. And the reason I want to mention Forex is because I'll be doing a special seminar tomorrow night, a webcast tomorrow night, Thursday, January 14th. Just look below to register, and I'll go over the major advantages of trading Forex, nuances between candlesticks and Forex and other markets, as well as my most important trading rule. And I'll be doing some chart challenges, a lot of fun stuff, and very important education about Forex. So if you're currently trading Forex, or if you're thinking about trading Forex, I strongly suggest attending the special webcast tomorrow night. Thanks for joining me, and hope you found this informative.